Ladies and gentlemen, good day and welcome to TCPL Packaging Limited's earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jenny Rose from CDR India. Thank you, and over to you, ma'am.
Good afternoon, everyone, and thank you for joining us on TCPL Packaging's Q3 and 9M FY23 earnings conference call. We have with us today Mr. Saket Kanoria, Managing Director, Akshay Kanoria, Executive Director, Vidur Kanoria, Associate Director, and Vivek Dave, GM Finance of the company. We would like to begin the call with brief opening remarks from the management, following which we will have the forum open for an interactive question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now like to invite Mr. Saket Kanoria to make his opening remarks. Over to you, sir.
Good afternoon, everyone, and thank you all for joining us on TCPL Packaging's Q3 and 9-month FY23 earnings conference call. I will begin the call by taking you through the key financial and operational highlights for the period ended December 31, 2022, after which we shall open the forum to have a Q&A session. As you may have noticed, we have delivered an extremely robust performance during the period under review, despite facing macroeconomic challenges. In 9 months FY23, our total revenue expanded by 43% to rupees 1,082 crore. This growth is primarily on the back of higher volumes and better realizations seen in both domestic and export markets, showcasing our resilient business model. Our folding carton and flexible packaging divisions both contributed positively to our performance during this period. On the profitability front, the EBITDA came in at rupees 172 crore in this period, translating into a margin of 16%. In 9 months FY23, the profit before tax significantly improved by 121% to 99 crore. PAT, as a consequence, increased 184% to 86 crore, and the cash profit stood at 163 crore, which is 90% higher on a year-on-year basis. This big increase in profitability is largely due to scale of operations and favorable product mix. We would like to share that we have also increased our stake in Creative Offset Printers Private Limited to 84% after investing in the recent company's rights issue. Our successful acquisition of Concall has allowed us to enter the high-growth rigid box market and tap into the booming smartphone industry. We are pleased to have onboarded several customers in this segment and look forward to expanding our business with them in the near future. Our business has shown steady growth each month, and we aim to continue this trend in the upcoming fiscal year. Once we reach a certain level of scale, this segment is expected to contribute substantially to margins in our overall business. Regarding our update on the second flexible packaging line commissioned at the start of this year, we are happy to share that it has been well received in the market and has generated significant interest from large clients for big orders. This has led to a faster than anticipated ramp-up in utilization. This positive market response showcases the quality of our products and services and our ability to meet the increasing demand for flexible packaging solutions. Due to this success, the company is now considering plans to add a third line in the same segment in the near future. It is worth mentioning that this new line would be a brownfield line, which will be established at a comparatively lower capex, as the land and building and other costs have already been incurred in the recent expansion. This expansion will help us to meet the growing demand of our product and services while also positioning us for continued growth. Looking ahead, TCPL is committed to sustainability and has implemented various initiatives to achieve this goal. Globally, the paperboard industry is making a positive impact in promoting environmentally conscious packaging solutions. As a leading player in the sector, the company is taking steps to promote sustainable practices by working with customers to replace plastic food trays with biodegradable alternatives and reducing the use of metallized plastic film by transferring the metallized or other similar effects into the paperboard. With the assistance of our subsidiary TCPL InnoFilm, we have started producing eco-friendly PE blown film commercially. As a result, TCPL is well positioned to meet the growing demand for environmentally friendly packaging solutions and is dedicated to playing its part in creating a waste-free world. To conclude, our focused strategy to growth through diversification has enabled us to consistently outperform our underlying industries. We remain committed to sustainably growing the company in the future, which will help create substantial value for all our stakeholders. On that note, I have come to the end of my opening remarks and would like to now ask the moderator to open the forum for any questions or suggestions that any of you may have. Thank you very much.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gunjan Kabra from Niveshaay. Please go ahead.
Sir, thank you for the opportunity and congratulations for reporting such a good set of numbers. So my first question is I wanted to know the revenue contribution of flexible packaging this quarter versus the previous quarter, which is quarter on quarter, and the capacity utilization at which the new plant is operating at currently and the old plant also. If you can guide on this.
Okay, thank you. As you are aware, we are not sharing, a breakup on revenue share, so it's a little difficult for me. But the capacity utilization of the flexibles now, the old and the new plant, is at 90% levels. This is only since the last quarter, and it's operating at very high level utilization, and it's a short span of 9 months. So that's why we are very excited to look at a further expansion in this segment.
Sir, that is very good. The cumulative capacity utilization is 90%, or the new capex that we did in the tech packaging is operating at 90%?
Cumulative for the first quarter. One plant. It's one plant only. It's not two separate factories. Okay. But my point is, it's third quarter is higher utilization.
Okay, got it. And sir, it's the new capex of 5,000 tons on the carton side completed, that we were expecting it to be completed by the end of FY23?
So the FY20, that is on track. There is a new line is already, and it will be under installation soon. So we hope that by the end of March, it will be commissioned.
Okay. And also, sir, what was the export contribution this time? Like this time, was the growth more by export or was it domestic led? And how are we seeing export market for films and cartons both? In the film market also, are we planning to export? And how do you see this market?
Also, we are exporting, though the percentage of export there is not in line with our overall export as a percentage. But overall export last year declared in the balance sheet was about 25%, and the growth in exports this year has been slightly higher than the growth in overall domestic. So the export is actually getting a higher share of the overall revenue.
And so how do we see the export market going forward for next 2-3 quarters? We are
quite bullish on export market because we have also established an office in the Middle East that is helping our efforts, and in generally the mood on India is very positive. The exchange rate is also in our favor. The freight costs have come down. So overall export out of India is currently as more positive than it's ever been last couple of years, at least since COVID.
Okay. And so I also wanted to understand one thing on the film market that.
Ms. Kabra, could you please take the mode and talk? There's a lot of disturbance.
Okay, just a second. Is it better now?
Yes, you can go ahead.
Yeah. So I wanted to understand in the film market that because it's, a recyclable product, so are we getting any premium for the product against the recyclable one in the market also for this?
No, recyclable film is only a part of it. That is more for development and capability. But most of the film used is not having recycled content. So there's no premium associated with it yet.
Okay. And then on the raw material front, are we witnessing price decrease on the virgin side paper also? Because I think the recycled part, which is 50% of our raw material, has been, we have been seeing decline in those prices. So are we seeing any decline in prices on the other raw material mix also?
Yes, the overall paper market is showing a declining trend in the last 1 month particularly, both recycled and virgin. But in virgin, the decline is very marginal, and in recycled, the decline was much more.
Okay. So the realizations that you mentioned in the beginning of your commentary that we had this quarter was very robust in exports and domestic markets. So it is expected to remain almost the same for the next quarter also, right?
So right now, you see in the paperboard segment, prices are currently stable, and China has recently opened up, and that is creating some demand, factors around the world. So while the decline in India was more to do with, the global pulp and raw material availability, but as right now we don't see any major change which will happen, and hence the growth will be maintained in the sense that what revenue run rate we are currently on, there doesn't seem to be any sharp correction to that because raw material price is going down. Because it's been going down gradually over the last few months, and that's already been factored in.
Okay. Got it, sir. Thank you so much and good luck.
Thank you.
Thank you. Our next question is from the line of Pawan Kumar from Ratnatraya Capital Partners. Please go ahead.
Sir, what would be the utilization of the paperboard? And also on the new flexible line that you are talking about, what is the capex expected, sir? And how do we see the gross asset turns playing over there?
So the utilization in the paperboard carton is on an overall basis roughly of 80%.
Okay.
And what was your other question?
On the new flexible packaging line, third one that you are proposing, how much is the capex that is expected to be done, and what kind of revenue terms can that achieve?
So we are anticipating a capex of rupees 50 crores, which will be incurred during the year 23-24, and the turnover ratio on that could be higher than 2.5 because it's a brownfield expansion. So there's not much investment in building.
Yeah. And sir, when you were talking about the new line being available from March 2023, was this line or something else?
No, March 23 is the offset line for paperboard.
Okay. Offset
This is the paper flexible, your question was.
Okay, I got it. And theoretically, how high can the paperboard utilization go?
It can go upwards of 90-92%.
Okay, fine.
Yeah.
Thanks. That was my.
Thank you. Our next question is from the line of Vipul Shah from RW Equities. Please go ahead.
Congratulations, sir, on a fantastic performance, and congratulations on a very consistent performance. So, double kudos to you and your team, sir. Couple of questions, sir, from my side. So we've seen in the last 4 to 5 quarters, the gross margin has actually dipped below 40%. Which has never sort of, last 4 or 5 years, including COVID periods, gross margin was always above 40%. So would like to hear, your comments on that. And secondly, sir, on creative, if I assume that, the quarter 3 top line was roughly around 12 crores and it was EBITDA break even. When do we see, sir, meaningful increase in the top line in creative, and will the EBITDA margins of creative be in line with the company EBITDA margin, sir?
Okay, thank you very much for your comments, much appreciated. Yes, the point about the gross margin, historically around 40-41%, and this one is 39.3, 39.2. So it's a very marginal decline overall, but on a much larger scale. So there's nothing much to talk about that, except that the raw material cost, if we look at, that has moved up, from 58 to 57% to 60-61%, which is leading to this gross margin slight drop. Actually, our employee cost has gone down because of the scale, which kind of helped us achieve a similar gross margin. So the raw material costs have in general gone up, and even though you pass the raw material on, as a percentage it increases because
Got it.
you don't get the margin on the increase.
Got it.
So I think that should answer your question on this. But on creative, as I mentioned in my opening remarks, it's EBITDA break-even, net negative, and the scale is still very small. I think the next financial year will go in settling it down more and getting some traction. Really speaking, I would think that in the year 24-25 is when we hope to come to a position very close to the parent company. But it's a struggle. It's a new business, new segment, and therefore it is taking a little longer than anticipated.
And if I may squeeze in one more, sir, consistently last 2 quarters, company has been delivering upwards of 350 crores in top line. You think, sir, and I think you mentioned also in your earlier comment to a response, to a question, to a query, but is this sustainable, sir, going forward?
I mean, at the same time, we've added capacity also, and, we do have some headroom there. So even if pricing is corrected to some extent, we can still hope for a volume increase to overcome that. Right now, you've seen FMCG results in this third quarter. I'm talking about our customer results. You've seen the volume growth has been very low. Generally for India, for FMCG.
In some companies, yeah. That is the reason, sir, we are asking, because we see a general commentary by a lot of companies about, there being muted growth or or some softness. So, is it reflected in your order books, sir, also, or you think this is transient?
No, as of now, our order book is fine. It's normal. There's not been any impact of that. But because maybe our market share increased, we've added a lot of new customers. Export volume has stayed very stable. So it's a combination of everything. But as I mentioned that, the Indian inflation is now well within control overall as a country. In fact, prices are being corrected. So going forward, I think in 23-24, volume growth also should be much better than what it was in 22-23.
Got it. So thank you so much. And again, one more comment I would like to make, sir, is that fantastic performance resulting into great ROCs and ROEs for the company, sir. Congratulations again and all the best.
Thank you very much.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. The next question is from the line of V. Rangan, an independent analyst. Please go ahead.
Good evening, sir. It's a very good performance. I congratulate the management. Now it is coming to a very turnover becoming higher. The current year turnover will be roughly about 1350, like that it will come. I would like to know that. Then the interest cost is gone up. Have you increased the gross block this year? How much is the increase in the gross block current year? And the next year, how much you are going to capitalize that?
Thank you very much. Well, we've achieved a net revenue year-to-date of 1050 and a net sale of 1030, and the last quarter was 358. So we should certainly cross 1350. We don't have much doubt in our mind on that.
I always appreciate a company which is increasing not by the rate, by the capacity, because you are increasing consistently. You have correctly balanced and increased the capacity.
Yes, that's fine.
That's very good actually, because that is a correct position actually. You have done correct way. And I would like to know how many customers you have added this year. And regarding now, you see, what is the conversion cycle, number of days, anything increase or it is stand still like that?
All these things are normal. And customer added, there are many customers we keep adding. So very difficult to give you a precise number.
Roughly, now you can command because you are in a very better position. I think unless if it is a sufficient scale, you need not take the orders actually, because if it is a profit, because you have come to a position where you can bargain and you can correct the price, no? Actually like that, no? You have reached
okay, thank you, sir. Thank you.
Because that is what, company needs to command it, not like just taking order for the order's sake. That thing, I think, over, that's one thing.
Yeah.
Now,
thank you
regarding the employee, now very goodly put the employee expenses, because the volume increase, I think it's going to come down, correct? As a percentage of the sales. That's very good. I see the numbers are very good. But what will be the next 2 years or 3 years? Can you give some projections like that? How many gross block, how much you're going to, because after that you will be going to the raw material price, you have stated that you are going, it is increasing. Now, if you can add how many months raw materials you keep actually, I would like to know that. Then regarding the insurance, that 17 crores you have bought it, and what was the return down value of that? On the difference only you pay the tax, or how is that? I would like to know that.
Okay, thank you very much. I think you're asking so many questions, but basically, next 2 years also we see a good growth. As a company, we have done, very consistent growth year on year. So we don't see any reason why that trend should not continue. Obviously, we need support of the economy, which is in good shape right now. So we are quite positive. And on this insurance claim, there was no much written down because the machine was quite old. So the tax on that, there is a certain formula which we are paying, the percentage, but lower than the regular tax rate. And I hope, that covers most of your questions, and I would request the moderator to, get the next speaker.
Sure, sir. Thank you. We will be taking our next question now. That's from the line of Pulkit Singhal from Dalmus Capital Management. Please go ahead.
Thank you for the opportunity. Congrats on a great set of numbers. First question was, I was just looking at, one of the global players, graphics packaging results over the last 2-3 years. They have increased their total addressable market from $5.5 billion to 12 in just 3 years due to sustainability and movement from plastic to paper. In this context, I just wanted to ask 2 sub-questions. One is whether you're seeing a similar trend within your exports, because that has been growing now for last 4-5 years at a very high rate. And secondly, are there any conversations among your domestic clients where this trend might benefit you in the near future?
Thank you very much. In US, where graphic packaging's majority of sales are in North America, and there has been a tremendous shift into paperboard-based carton, mainly for the food segment. In India, we don't see any such major trend to counter that, because our frozen food and those segments are very different in India. While the overall trend is in that direction, but it's not as focused and specific to that market, and that market is also very small. So it's growing, but it's not that dramatic. And in terms of export inquiries towards that trend, yes, there are some inquiries, some beginning is there, but still the base is very small to make an impact. So I would say yes, the answer is that it's in that direction. But the overall business, what we do is a very, very small percentage. Whereas these big, paperboard-based carton manufacturers internationally, food is a very dominant segment in their overall basket. And so that trend gets captured very quickly. In India, it's more FMCG-led growth. And food and beverage is a smaller segment.
Understood. So how do we understand the structural growth aspects in exports then? I mean, how do we see this business 3 years down the line? Any trends that are helping you there? Because it has been growing at a very rapid pace.
As I mentioned in the answer to somebody else's question, the export, right now the macro picture for India is very positive in terms of export. Apart from the freight going down, the exchange rate in favor, raw materials available, the political, or rather the image of India is also much better. So almost everybody is looking to explore India as a sourcing hub. A lot of our multinational customers, parents are also visiting and exploring. These things take a lot of time, but overall the trend is very, very positive. And mainly it is to diversify out of China. So we feel that the sustainability is one part of it, but the general export opportunity will keep growing. That's the way we look at it.
Understood. And to that extent, your capacity expansion plans, I mean, do you see any need to do a much higher capacity expansion to capture that kind of opportunity, or will it be incremental in terms of growth? I mean, so you mentioned about 50 crores of capex in FY24. Is that a company-wide capex you're planning, or just for one plant?
50 crore was for the flexibles. The company-wide will be little more, but in offset, because we just got a new line, we are not looking at any other major expansion, but we reserve our right to do it any time we feel there's an opportunity, and we wouldn't let an opportunity go a begging because we don't have capacity. So we'll do it as and when needed, but it's not that you just set up plant and wait for the export to come. This thing increases gradually only.
Understood. Lastly, I mean, when I look at the past, you have done 17% kind of margins for a couple of years. I mean, obviously the situation is very different now. The competitive dynamics is different. You have different segments growing. And my understanding is rigid packaging, whenever it achieves the scale, is a higher margin business than than your current? I mean, you mentioned this in the past. So, is there a reason one should assume there to be any margin risk, or can this increase even here on if things are going well?
I think the current margin itself is quite healthy, and obviously our strive is to keep increasing. The scale will also help us, and if raw material costs are not volatile, that is also positive for us. But nevertheless, there's competition, and end of the day, the bottom line is that the volume growth has to be much more in the country. If we are talking of 2-3% volume growth as a FMCG sale, then it is very challenging to grow margin. But yeah, if the volume growth as a country as a whole become more buoyant, then I think rising sea will lift all boats. So it will make a difference.
Understood. Thank you, and all the best.
Thank you.
Thank you, Anik. I know Resham Jain from DSP Investment Managers. Please go ahead. Resham Jain, please go ahead with your question.
Yeah, hi. Am I audible?
Yes.
Yeah, thank you. Good afternoon, and congratulations for a good set of numbers and consistent performance. Sir, I have a couple of questions. So first one is in terms of flexible packaging. Earlier, we used to say that our margins used to be slightly on the lower side since we were operating single line. So after the second line of operations, have the margins now very close to the paperboard margins, or still there is some difference between the two?
Yes, thank you. Yes, the flexible margin, of course, earlier the overhead loading on one line was causing that problem. So, and the second line has started in April, and really the volume has picked up only in the third quarter, and we have seen a big improvement in margin from what it was. But it's still much lower than carton because of the simple fact that the turnover ratio there is much higher. So we've still got a while to go as we bring in more premium offerings and have a more consistent output. I think that the margins will further grow, and however, I don't think they will match paperboard because of the basic structure of the investment to turnover profile in that industry.
Understood, sir. So my second question is on flexible packaging, where the plant is currently at single location, unlike paperboard where we have multiple locations. So here also, are there, you feel there is a need to have multiple setup, or as of today, logistic is not a challenge from a supply perspective to the clients?
Logistic is thanks to our Prime Minister and Mr. Gadkari, a lot of development is happening on the logistic front, and that will keep happening. So it is less of a challenge because the unit price is high and more material goes into a container compared to a carton. So the freight cost as a percentage is lower. But nevertheless, multiple plants in the future can't be ruled out. But right now we have a lot of room to grow our current site. So we would like to first do that so that our costs are in better control, and we utilize the current site to its optimum, and then we are keeping on looking at other opportunities in other geographies like in south or north or east. But on the anvil immediately, I don't see anything. But you never know if some segment grows somewhere, and where we are a part of, we would be happy to look at that location.
Okay. Right. So the third question is on creative. In your opening remarks, you mentioned that you're significantly bullish on this space, and substantial kind of growth can be expected from this. Obviously, you have just taken over. So you feel that this 12-13 crore run rate which we are doing on a quarterly basis, let's say 3 years, 5 years down the line, what kind of expectation or internal benchmarks you have created for this particular vertical? Just to gauge, to understand the kind of scale which you can achieve in this business.
I mean, 5 years is too far, but in the, let's say, couple of years, we hope to double our revenue. That is a kind of bare minimum we expect. And from there, it depends on how, this segment performs and the electronic demand supply. The PLI schemes which the government has offered suggest that it's a long-term thing. So if the customer base is going to keep growing and India has become a big export hub, this segment can keep growing quite substantially. And in the PLI, all of these manufacturers have given targets that it is lasting for 4-5 years. So I see that over the next 4-5 years, at least the overall industry is going to keep growing. And then how well we perform within that, obviously it will determine how well we do. So the overall segment is certainly bullish.
Understood, sir. So the last one is on capex. If you can help with the capex for this year, how much you will end up with, and for FY24, what is that you are planning for?
So, this year the capex will be about 100 crore. And going forward next year, it will be probably lower than that. But we are looking at opportunities to see where else and what else we can do.
Okay, perfect, sir. Thank you very much, and all the best.
Thank you. Our next question is from the line of Ramu from Equity Intelligence. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking my questions, and congratulations for the good set of numbers, consistent performance. So I have a couple of questions. One is on this mobile cover packing. So what is our capacity utilization, and where what kind of growth we are seeing there, and how is the profitability? And the second thing is we have a competition that MNC company Huhtamaki. So we are having a consistently we are doing very well and expanding our business, but they are going through a tough phase last couple of years. So are we gained any market share from them, or is it a company specific issue, or it's a broad any major shift in the segment?
No, we don't. Thank you very much. On this creative, I've already answered your questions pretty much earlier during the call. So there's nothing much really to add. And on we don't comment on competition issues, but we've grown and market is growing and our overall segment is very large. So I would limit it to that.
Okay. Thanks.
Thank you. Our next question is from the line of Anushri from Alpha Invesco. Please go ahead.
Hello.
Yes.
Hello, am I audible?
Yes, please go ahead.
Yeah. Congratulations on a good set of numbers. So I just wanted to ask you a few questions regarding the cigarette segment. So if you could comment on what kind of growth are you witnessing in cigarettes, and who is our biggest customer in cigarette segment? And also, more of players are launching this 10 cigarette boxes. More and more 10 cigarette boxes are being launched. So have you witnessed that smaller pack sizes are driving growth? And what would be the margin difference or realization difference in the smaller boxes and 20 cigarette boxes? Thank you.
Okay, thank you. You are very focused on cigarette business.
Yeah.
Firstly, cigarette, if you have seen the results of the cigarette producers, the segment is finally showing a growth in volume, and we are servicing all the three cigarette producers in India. Godfrey Phillips is traditionally the first customer we started business with, and then we did with VSC, ITC, and whoever else makes cigarettes here. But there is no such thing about 10s and 20s in terms of margin, and 10 cigarette is not something newly introduced. The 10s pack has been there for a long time, and in fact most of the cigarettes sold in India do come in 10s pack. 20s is only a small king size segment, which is very premium. So there the volume is very small, but there is a new 5s pack also, but very, very small volume. So but I would say that there is no difference really in the margin of the two. But India is basically a 10s pack market.
Okay.
Yeah, thank you.
Thank you.
Thank you. Our next question is from the line of Pawan Kumar from Ratnatraya Capital Partners. Please go ahead.
Sir, we were talking about debottlenecking capex on the paper segment, the paperboard side. So, when is it expected to come online, and how much capacity will that add to the existing paperboard capacity?
No, we already answered this question. There's not much of debottlenecking issues as of now.
Okay.
So we already answered. No, it will be ready in Q4, meaning this quarter.
Okay, and how much will the capacity increase by in terms of percentage?
How much will it increase? 10%. 5 to 10%.
Okay, that's fine. And what is the EBITDA margin band we should expect over the medium term, sir, in the business?
Again, this question we have discussed, and the EBITDA, as I said, has been very healthy, and so we'll be happy if we can maintain similar levels on a higher base as we go along.
Okay, fine, sir. Thank you.
Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. As there are no further questions from the participants, I now hand the conference back to the management of TCPL Packaging for closing comments.
So thank you everyone, and I hope we have been able to answer most of your questions. Should you need any other or further clarifications, or you would like to know more about us, please feel free to contact our investor relation teams or CTR India. We hope to have your valuable support on a continued basis as we move ahead. On behalf of the management, I once again thank you for taking the time to join us on this call. We look forward to more such interactions in the future. Thank you.
Thank you, members of the management. On behalf of TCPL Packaging Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.